Hello and welcome. I am Sudarshan Sukhani, a research analyst at Technical Trends, bringing you this insightful presentation. I am a professional registered with SEBI. My focus is on delivering in depth market analysis and comprehensive trading strategies. So let's begin. We are going to look at the Nifty today and then think of some plans for next week. This is the end of day chart for the Nifty. It is as spectacular as is possible. One of the things that you can note is this. This is a shoulder, this is a shoulder, and this is the head. This entire rally for the Nifty did start from what was approximately a bullish head and shoulder. Now, this is all history. It's easy to say after it happened that, see, this is what the pattern was. But this is just out of curiosity that I'm pointing out a pattern that then told us that a significant up move may be coming. What about now? Look at these gaps. Gap, gap, big gap again. Today was a tremendous movement in the markets from a low of 21,235 to a high of 21,492, almost 265 points intraday. That's a lot. So this is all history in the sense that most of you know it, and I'm just repeating it so that we are all on the same level. The key question is, if you are long in the Nifty, how do you exit? And then, what is a dip in which we can buy? So we'll answer two questions, one after the other. Normally, we say that, okay, place a stop below the low of the last two bars. That would be here. 21,074. So the Nifty is at 21,453. So a stop here would really mean a 350 point stop. That's not a good idea. A 350 point stop for an intraday trader is not something or a swing trader is not worthwhile. So my suggestion is that because of this enormous gaps and large swings in the Nifty, stops on a daily chart should not be considered. We should step down to a 30-minute chart. On the 30-minute chart, it becomes much easier. One, two, three. In fact, if you see this strong support that had emerged today, and this could be a stop, and this is approximately 21,300. So we may think of 21,300 as a stop loss for any trades that we have on the Nifty. That's one part. And this is it's not rocket science. When this is 21,300 and the prices were just attracted as a magnet towards this line. So this can be a reasonable stop. It's just below these lows. That's because a daily chart would give us very wide stops, and that's not a good idea. The second point is, how do we re-enter? Now there are two ways to re-enter. We want to buy on a dip. A very simple way of identifying a dip is to look at the MACD. Once the blue line, the main line of the MACD line goes below zero. Here it went below zero. And again, if it goes below zero, this is actually a dip. It's not a selling opportunity. It's a buying opportunity in a raging bull market like this. So this could be one way of identifying a dip in which we want to buy. Now we have to be patient. It'll take its own time to come here, but it will. And that could be one way of entering. The second way of a dip, of course, is to decide, okay, the Nifty has fallen and let me buy. That's sometimes also a profitable idea. But if you want a technical method, you can identify an MACD, look at a 30-minute chart, and then identify the RSI. If the RSI goes below 40, that's a dip. And those are buying opportunities, not selling. So today we have considered two aspects of Nifty, a place where we can put a stop loss and a method to buy a dip. Thank you for watching this video. First, a disclaimer. All results are simulated. Past performance is no guarantee for future results. Commission slippage and costs have not been included, and this is not a recommendation to buy or sell anything.